Welcome to another day in the Matrix, waters above crypto. I was going to take today off of making a video, but as you can see, it's kind of an emergency update. I named my video yesterday accordingly with the title Warning, and it was to just get people to be ready for anything to happen as we were moving into the 4/20 date with the 42 numerology. And as you can see, a nice little sneak attack red candle coming in last night around 11 p.m. Washington, D.C. time. So if you're new here, we do cryptocurrency technical analysis and combine it with the esoteric science of Gematria Numerology and Astrology to understand these markets. If you haven't already subscribed and you like what we're doing here, feel free to subscribe, give this video a like, and share this channel with other conscious people to help grow this community. If you'd like to join the Mastermind course, my email is in the description box. There's a promo code for lifetime access to the Mastermind in the pinned comment below. So let's take the red pill. Today, we're going to just quickly go over what we're seeing leading up into our weekly close tonight, and I have a little bit of a theory and also some worst case scenarios to look into as we move into the next week. We're starting here with the Bitcoin chart. A lot of people ask, why do you focus on Bitcoin so much? And I tell them time and time again, because when Bitcoin dumps, all of your altcoins will dump. That's what we saw last night. All you really need when it comes to technical analysis is to have a very good base foundation of how to do TA on Bitcoin. Because when it's the weekend like this, and you see a huge liquidity event happening while the institutional investors are quote unquote off, it gives you a sign that retail couldn't have possibly done this, and this was a planned event. A lot of people are talking about a power outage in China and all this stuff and the hash rate going down, yada, yada, yada. But I've just seen some information on Glassnode showing that around this $50,000 wick, it was quickly bought up by a ton of buying pressure, and what occurred after that was most of it moved off of exchanges and into hardware wallets. So, this could be a good thing, but I'm going to show you all the scenarios to look out for and some other things that might be a little bit more telling as to why this all occurred. So first things first, we see an anomaly on this chart. This is the first time, excuse me, this is the first time since this chart has been formed all the way back here in October where we have fell out. And that's interesting because that's going to tell me if we pull back into this around 59,000 and get a rejection, this could peel back and then this chart will be completely invalidated. One thing I want to quickly bring up though is the CME, which is the Chicago Mercantile Exchange. And what I'm seeing here that I didn't really discuss in any other videos until this one is a gap. So we have a gap around 55,000 to 54,000. And I'm not a gap believer. I actually don't like talking about gaps too much. I think it's sort of a waste of time. But if we were to open right now, we would be sitting right above this gap. So what could potentially happen is when this opens, which is sometime around 6 p.m., I believe, in an hour and a half, this will quickly most likely fill this gap, and then we'll have to see how it goes from there. But another thing it's going to create is another huge gap between here, where we are sitting right now, around this level, and all the way where we open, which would be somewhere, we're sitting around 56,000 right now, and CME opens up a little higher, so we're going to have a huge gap right there. So there's going to be a gap below here that has yet to be filled, and then there's going to be this huge gap over here. So there's a potential that the price opens around here and quickly fills this and then comes back down if it gets a failure of breaking previous highs. And that is called a dead cat bounce. So we're going to quickly go to another chart and just show you how that could all play out and how it will affect the entire cryptocurrency market. So I'm going to come here and I'm going to show you if we take a Fibonacci retracement tool and pull it from the current all-time high down to this bottom wick, we have a scenario that could play out called the dead cat bounce, which in cryptocurrency I personally like to take up to the 618 because the 618 is a little bit higher. Cryptocurrency is more volatile. As cryptocurrency is more volatile, a dead cat bounce could go higher than the zero point 0.5 Fibonacci. Anyone who does Forex or does any trading knows that the dead cat bounce is when we have a failure of the 0.5 fib, something like this. We get rejected at the 0.5 and then make a new low. With crypto, you could actually go as high as the 786, believe it or not. So I just look for this the 618 because it's in alignment with this channel. So it would be a rejection at the top of this channel, which was once considered a support. It would be flipped as resistance. Then you would get the dead cat bounce. And that could put us into some really strange territory that we haven't seen since back here in January. So here's a play-by-play. I believe we're probably going to open tonight CME, fill this gap to the upside, see how we react at this level, and then if we can't hold, this is going to be something we might have to go back to the drawing board. And this could potentially make the bull run put in a short-term cycle top around the 65,000 region, and we might have a consolidation period that goes all the way through the rest of this month for sure, maybe into the beginning of May. It just depends on how quickly this all shakes out, because in crypto, when you have a violent, fast sell-off, you typically have a nice buyback. And we could actually have a scenario that's like this right over here in February, where we dumped really fast and then got bought up. So let's bring up one of the other important indicators, which would be the 55 EMA, and that is this white line. Some people like using the 50. I'm using the 55 because that's my style. If we close tonight's daily candle above this 55 EMA, I anticipate we have to now look for this 618 around 60,000, and then we'll see from there. We would need to get a closure above this yellow moving average, which is the 8 EMA on the daily. And that would put us in a good scenario for what would be just considered a stop and roll reversal pattern. Again, if you guys are new here to technical analysis and you're kind of unsure of what I'm doing, feel free to email me in the description below if you want to get the mastermind course so you can learn all these technical things I'm discussing. But with that being said, the fact that we had this huge liquidity event and then now we're sitting above the 55-day EMA, this is a very good thing. This means that this could have just been a huge planned attack to wipe out leverage long trades and to reset this market to be back to the upside. Got a lot of scenarios going, so we'll take it one by one. Close above the 55, then we look to 60,000. We look to see how we act on this yellow EMA, the 8 EMA. If we get rejected there, the odds are we're coming back down to the 55, and if we close a daily below the 55 after that, we're probably going to get the dead cat bounce scenario, which will take us to our next big target, which is the 21-week EMA, which is currently sitting at around 43,500. Tonight, if we close where we're at, it'll pull this up probably to around 55, 56, and then it could technically come back down even more. So I'll just say this previous 42,000 would be the next big downside target in the event that we see the dead cat bounce scenario. This whole pattern of this parallel channel right here might be completely invalidated, and that's just crypto. It's very volatile and something we have to keep in mind. But this weekly candle is not actually that bad. The reason why it's not that bad is because you can see that the candle body isn't a doji, so it's not necessarily an indecision candle, and it's also above the previous bodies from the weeks prior in late March. Another thing, a huge downside wick, which means that there is buying pressure. There's people buying this dip. So it's very important to be considerate of that. Sorry, my throat. I've been making a lot of videos and talking a lot lately, so excuse me for my raspy voice today. So this is something that's not looking so good for XRP. Got to pay attention to this, okay? This is a terrible candle for a weekly close. This is like a dragonstone doji. This type of doji is not good. This could actually be a reversal for XRP. So people need to pay attention to this. I brought up that there is a potential to dip down to $1.11. That's actually exactly where we came down. On this chart, you could see it's 115-ish, but basically we just came back to test this area right here, and it is now confirmed as a support so far. So we need to hold this 110 level. You can see the 1618 got retested. We brought that up the other day in the warning video because we fell out of this red trend line. Now we would have to see how this goes because we have a huge trading range. We could have a trading range that is extreme, somewhere between 196 and $1. And that would actually be really good for XRP. So as long as XRP can hold this 1618, the $1.17 region, I believe that this could be a very, very good time for XRP holders to prove that this isn't just a big pump and dump scheme like we're used to seeing. But with that being said, I do not like this weekly candle. This weekly candle is a huge doji. It's not good. So we have to see how this goes. It'll all move with Bitcoin, so please be considerate of that. I don't want to get too much into the altcoins because I already made my video for the Patreon today where I went over a play-by-play of all the altcoins. Anyone who's new here that wants to get insider information, I have the Mastermind community. The link is in the description box below. I'm active there on the weekends. I typically take Sundays off from YouTube, but I decided to make this one for you guys today. I'm probably going to take off tomorrow because my voice hurts from talking so much. But anyways, I appreciate you guys. If you're looking to join the Mastermind course, got a promo code in the description, or sorry, promo code in the pinned comment. Enjoy the rest of your Sunday in the Matrix. Much love.